Hi, my name is Blake Bailey, and this is for the Principles of Finance. The company that I have picked is called Caterpillar Inc., CAT. The first thing I'm going to talk to you about is Caterpillar, the company, how Caterpillar compares to another company in this industry, finance ratios of these companies, how I believe is the best way for Caterpillar to raise money, and if I were to buy or purchase stock in Caterpillar. Caterpillar is the world's largest manufacturer of construction and mining equipment with diesel and natural gas engines in the industry of gas turbines. Caterpillar is ranked number 1 in this industry and number 44 overall in 2009 Fortune 500 per Caterpillar.com. There is no clear number 1 competitor against Caterpillar because they are in multiple fields. But in construction and mining equipment, Komatsu and Volvo are right there. There's another company called CNH, but they mostly compete with John Deere in the farming industry. Caterpillar believes that they build the best and are the best. The main competitors that I have found are Komatsu and Volvo in the Japanese market. Also Mitsubishi, until Caterpillar had joined with Mitsubishi. Joining with Mitsubishi, Caterpillar would be the first United States company to merge with a company over there, and still is number 2 against Komatsu. Komatsu knew that they were going to have a hard time competing with those two companies and had branched out just as Caterpillar does. Komatsu now exports whole machines all over the world, putting assembly plants in Brazil and Mexico. Komatsu also began establishing business between multiple countries, focusing on the third world, unlike Caterpillar. Caterpillar knows that they have contracts all over the world. They have a global dealership network that provides a competitive edge. Customer deals with these people and they know that they can trust Caterpillar. Many of these relations with the customers can span to at least 2 generations. Caterpillar dealers serve equipment, service, and financing needs for customers in more than 200 countries. And there are over 1,200 outlets worldwide of retail services. Caterpillar has started to drop out of the farming industry due to other companies that are building, like International, Ford, John Deere, Neuhauser, Allison Chalmers, and many more, because they are producing at a cheaper rate. Caterpillar is still producing some of the farming industry, but they are dropping some of their products that are not worth building compared to John Deere, that is leading in that field. Caterpillar knows that they're losing profits in that, so they're going to go on building better equipment in their other industries as construction and mining. Caterpillar knows that their prices for the machineries are higher than their competitors. They believe that they build with the best parts, and it's built to last. Volvo sells practically the same model that they have, which is a L990, and Caterpillar is the 950H, and it's a little bit more money for the Caterpillar, but that just the base price. If you add $40,000-$50,000 more, your Caterpillar could have everything your car or truck has nowadays: power seats, heated seats, air conditioning, radio, CD player, navigation. They use that in the farming industry as well. Consumers know that what they're getting, and they know that Caterpillar is going to stand behind their product, and they know how it's built. It's built to last. And that's why most people will pick Caterpillar over their competition. Plus, now Caterpillar is advanced in their technology compared to other people in their field, which helps them also. Now, this last couple of years have been pretty bad for the United States due to economic and political uncertainty here in the United States. Caterpillar announced record sales and revenue in 2012 of $65.87 billion, an increase of 10% from the $60.138 billion in 2011. Profit per share is 8.48. Was also an all-time record, including the impact of the previous announced goodwill impaired charge of the 87 cents per share. The 2012 per share of $8.48 was up 15% from the $7.40 in 2011. Profit was $5.681 billion, an increase of 15% from $4.928 billion in 2011. The fourth quarter in 2012 sales and revenue were $16.075 billion, down $1.168 billion from $17.243 billion in the fourth quarter of 2011. The impact of the change in the dealer new machine inventory lowered sales by about $1.4 billion as dealers reduced inventory about $60 million in the fourth quarter of 2012, compared with an increase of about $800 million in the fourth quarter in 2011. Fourth quarter 2012 profit was $697 million compared to $1.547 billion in the fourth quarter of 2011. Profit was $1.04 per share in the fourth quarter of 2012 compared to the profit per share of $2.32 in the fourth quarter of 2011. Fourth quarter 2012 profit was negative, impacted by previous announced goodwill impairment charge of $580 million or 87 cents per share. Lower sales and revenue and the cost impact from sharp low production and the $2 billion decline in Caterpillar inventory also had a negative impact in the fourth quarter profit. Those impacts were offset by $300 million positive impact related to the settlement of prior year tax returns. As a formal standpoint, 2012 was a successful year with a record sales and profit in a tough economic climate. Consider the weak economic in the United States along with such of Europe and recession and China slowing. We had a solid year. Our operating profit pull-through was very good. We made progress adjusting inventory levels, and our quality and safe indicates continued to improvement, said it. Caterpillar Chairman and Chief Executive Officer Doug Oberhelman, which was in Yahoo 2013. Caterpillar is an outstanding company that has lasted over hundreds of years and holding up against the Komatsu Limited Company in its industry. Caterpillar is the largest of all companies in the industry and does well against these competitors. Here are a few ratios of Caterpillar and Komatsu. First, I took the quick ratio, which were Caterpillar was 0.8 in 2012, the end of 2012, 0.7 in 2011, 0.9 in 2010, 1.0 in 2009, and 0.8 in 2008, where Komatsu was 0.8 in 2013, 11, 10, and 0.7 in 2012, and 0.6 in 2009. The average for the quick ratio is about 8. Komatsu is about average, which is normally good, but sometimes they say above average is better. Ability to turn around and get cash quickly and have more cash available. Caterpillar is my suggestion is stronger financially than Komatsu by using the quick ratio. When figuring out the profitability for the two companies, it was a little harder because Komatsu is a Japanese-based company and everything is in their currency, the yen. So I try to do my best to convert everything into dollars. The numbers are just a little off probably, but they're pretty close to what they need to be. When I figure out the profitability of the company, I use earnings before interest and tax, EBIT, earnings before interest, tax, depreciation, EBIT, DI, and the net profit margin. For these companies, the EBIT, EBITDA, and the net profit margin for Caterpillar were 900,499 million, 12,312 million, and 8.62%. For Komatsu, the numbers are 2,156.5 million, 3,061.5 million, and 6.7%. The average rate for net profit is around 6.2. The higher the net profit is, the better the business is doing usually. It means that how much after-tax profit the business makes for every dollar it generates in revenue and sales. Next, I'm going to compare the debt management of these two companies. First, we're going to use the debt to assets ratio, which is 45.94 for Caterpillar and 27.33 for Komatsu. The debt ratio shows the company's assets, which are financed through debt. If it's less than 1, most companies' assets are financed through equity. If the ratio is greater than 1, most of the company's assets are financed through debt. Companies with higher debt to assets ratio are said to be higher leveraged and also in danger if creditors start to demand repayment on the debts. I couldn't find the industry average, but I used our textbook Corporate Finance, which is an average of 25%. Second, I put the debt to equity ratio together, which Caterpillar's is 228.97 and Komatsu is 56.97. The average debt to equity ratio in the industry of goods was 190.66. The average for service industry is 158.14. A high debt to equity ratio generally means that the company has been aggressively in finance its growth with debt. This can result in violent earnings as a result of additional interest expense. If a lot of debt is used to finance operations, the company could potentially generate more earnings than it would without the outside financing. Next, I'm going to talk about assets of these two companies. Some of the ratios that I was dealing with: the assets turnover ratio, inventory ratio, net sales per working capital. I came up with Caterpillar's numbers for these ratios, and they are 0.75 for the asset turnover, 2.99 for inventory turnover, and 5.18 for net sales working capital. Komatsu's numbers are 0.86 for asset turnover, 2.2 for inventory turnover, and 3.22 for net sales working capital. As I've looked over the numbers from Yahoo.com, I've noticed that Caterpillar is a stronger and healthier company and will suggest strong future for Caterpillar. The average estimate earnings go up every year in Caterpillar for the next 5 years, and so does everyone else in that industry, which is mining and construction. Caterpillar's revenue is almost double that in Komatsu in the next year, even though both companies show that they'll be in a loss for the last quarter, or that is because the quarter has not over yet for 2013. Everything for the future is going up for Caterpillar. The outlook looks strong, and it also looks strong for the industry. If Caterpillar was to raise a large amount of money by selling stock versus debt financing, which one would I pick for them? I believe adding more stock would be best for Caterpillar at this point, and the reason is that they have a large amount of debt as of now. If we increase the debt more, the numbers could look off. I know our book says that it's negative if we add more stock, and it's more neutral if we're adding more debt. But I think adding more stock, we're asking people, hey, is it okay? Stock prices may fall a little bit, but I think that Caterpillar is a very strong company, and it will make them look stronger if they're asking for the money through the stockholders. If I was in the banking industry to give them money, would I loan them money? I think I would loan them money. I wouldn't loan them billions upon billions of dollars. I think that I would go maybe 500 million would be probably one of my top number. They've already exceeded most companies in their business. Their debt ratio is higher than anyone else, but I believe that they are just a strong company and that they're going to keep building and be better than anyone else. And with the new technologies that they have for their company and the new engines that they are working on for cleaner burning engines, the new fuels that they're working for these And the longer that these machines are running, I think that people are more apt to buy these machines. And more companies around here in the United States, you go around and you can see that most companies, like our road commission, buys Caterpillar equipment because they know that they can last. And I believe that that is a good asset to have. So I would loan them money. If I was to invest money into this company or buy the company, I think I would probably buy the shares more than actually purchasing a company. Like I said, everything looks good. Their company is a very strong buy if you were to look on yahoofinance.com compared to other companies that are in their industries where it's at a don't buy or it's stay where you are, watch the market. They say the growth in the stocks will happen in the whole industry to increase 10% over the next year and 5% every year after that, possibly. There's a bunch of analysis done on Caterpillar compared to everyone else's in the industry, which makes me think that they're looking at Caterpillar more than anyone else because they know that they're a strong company and they know that they will produce and they will make profits. I believe that that's just a strong company, and I would put my money into them. Even though we are coming out of a recession, it's just something I believe in. I've talked about Caterpillar, the company, how Caterpillar compares to other companies in the industry, financial ratios, and I believe that Caterpillar is a strong company, and I would give them money and to purchase stocks. And I've also talked about how Caterpillar could raise money as well. And I want to thank you for listening to this video.